Morning. So, Lo que Callamos los loan officers brought to you by USA Loans. I'm here with Manny and Soyla, and we are going to go over some of the questions and solutions that a lot of people have throughout the loan process, right? There's a lot of misconceptions. There's a lot of thoughts that a lot of people have and they don't have the answers to. Yeah. So I would love to get down to it right away. So what is the biggest misconception borrowers have about the loan process, Soyla?
There's a lot of misconceptions, but one of the ones that I will say is thinking you need 20% to qualify to buy a house. That's like the biggest misconception I think that there is.
Yeah, I think assets are what's needed to close is definitely a big misconception. But one of the bigger ones that I come across personally is credit scores. So people contact me and they say, I don't have excellent credit. I don't have an 800. I don't have a 760. I tell them, well, you can buy down to 580 credit score with an FHA loan. Technically, you could go lower, but it's more down payment. So I always tell people, let's stick with 580. Let's aim to get to 580, right? That's the idea.
I love that.
And so that's, in my opinion, one of the biggest misconceptions.
Yeah.
And you could buy a house with as little as 1% down if you qualify for down payment assistance.
That's correct.
Or conventional people think, oh, I need 20% down, but you really only need 3% if you're a first-time home buyer. So there are misconceptions about needing a lot of money when you don't, or the credit score.
Correct. Yeah.
And I think the general idea, consensus out there is that, yeah, I do need 20% down to purchase a home. And the 1%, I don't think a lot of people know that program is out there.
Exactly.
So that's awesome, guys. So moving along, how do you handle clients who think they can get a mortgage approval just because they have enough money in the bank? Manny?
That's a good question. A lot of people that I have dealt with, let's say they have 100K in the bank, right? Or 200K in the bank. And that's great. That's amazing, right? That's good for down payment, closing costs, reserves, whatever. We also look at your debts on your credit report. We also look at your income history. You can have $1 million in the bank, but only have 4 months of employment. We're going to have a hard time qualifying you with a conventional loan. We're going to have to go with the non-qualified mortgage option. We also look at credit score, as we just mentioned previously. So there's a lot more to it rather than just you having money in the bank. And I think that it definitely helps your case having money in the bank. It's definitely easier to qualify if you have money in the bank, but we do look at a lot more items when it comes to qualifying for a mortgage.
Yeah. When somebody comes to me and says, hey, I have a lot of money, I can buy a house, I basically try to educate them and be like, okay, there's 4 main factors we're going to go over and we're going to evaluate. Your first factor, because we deal with a lot of our Hispanic community, the legal status is a big thing because that will determine what type of program. So I always tell them we're going to look at your legal status, we're going to look at your credit report, because the credit score will tell us or help us determine what rates we can offer and what program or programs they're able to qualify for. Then I tell them we're going to look at your income. There's a difference the way that we qualify them, whether it's self-employed or W-2. And then the fourth one is the assets. Do you have enough money for the down payment or reserves? Because we do offer down payment assistance programs as well. So I basically say it's not all just the money. There's other factors we review, like as Manny said.
And is the money in the account?
Yes.
Because everyone likes to have cash at home or
exactly.
on their mom's account or what's it will be.
Yeah, a lot of people don't know that you need to source where the money for the down payment is coming from. They think that, they can have it in their vault, in their safety vault. That's how you say, right?
Well, under the mattress, right?
Or under the mattress.
Yeah, those favorite spots.
Under the mattress. And as long as it's there, you're good. But they don't know that you have to have it into your account. You have to have proof of where it's coming from.
Yeah.
Yeah.
That's great. So obviously with the internet, a lot of people are able to find homes easily, right? And once they find a home, they feel like this is it. This is a home that I want to buy. How do you handle borrowers that just don't have that realistic expectation based on their budget and they're just trying to afford too much house?
Me personally, since they usually come to loan officers, well, they go to realtors first and then they get referred to us to actually qualify, right? When I have an application or a qualification that I'm working on, whether it be face-to-face or over the phone, I actually try to play realtor a little bit. I try to understand what they're looking for and understand where they're looking for. And it gives me an idea of their dream, which is amazing. It's great. I love to hear it. But I bring them back down to earth a little bit when I start taking the application and qualifying them. I even pull up Zillow or Redfin sometimes. I think it's good to look at it together because they can see realistic terms of the mortgage, realistic properties that they can buy, and they don't go to the realtor, not wasting their time, but looking for things that they can't attain, right? And so that's something that I think is really important, is clients understanding what they qualify for from the mortgage loan officer, detailing out what their payment will be so they're not overextending themselves.
Absolutely.
I think education, it's as Manny says, you need to inform them. At a buyer's consultation, when we have a buyer's consultation, I do like a mini first-time home buyers presentation where I talk about, the difference. A lot of people don't even know what the difference between a realtor and a loan officers are. So I explain that, and then I go over into, the importance of the debt to income ratio and how we can't, like, for instance, if somebody gets paid, I'm just going to throw a number of $5,000 a month, and I'm doing I'm trying to figure out up to how much they can afford. I do 45% of 5,000. For number of purposes, because I don't have a calculator, I will say 50%. Let's go with 50% of your income. Out of 5,000, that's 2,500. That's how much your monthly payment has to be at. Mm-hmm. And if you have debts, you have to subtract those debts from the 2,500.
Yeah.
And that's how I tell them that this is you have to be able to not pay more than the 50% of your income. Mm-hmm. And if they know that a house that they're trying to buy is a lot more expensive, and I'll know the mortgage payment will be a lot more expensive, then I advise them to get a co-signer.
Mm. That's a good strategy. Yeah.
Yeah.
So basically not advising them to max their loan amount that they're approved for. It's going a little bit less so that they're able to have some wiggle room with their expenses.
Their sales price is maxed at, 50% of their income. Always, that's the max. But if they say I can't afford more than $3,000 a month, and I know the mortgage is going to be $5,000, and they can afford the $5,000, then I tell them, if you want to keep your mortgage payment at, the amount that you want, then you have to stay at this sales price so that they can, afford the house. Because sometimes there are people out there that they can afford a $5,000 payment, a $800,000 home, but they don't want to. They want they want something lower because, I don't know, they have other expenses that we can't see.
Yeah.
So
one of the things that realtors hate, right, is not closing on time.
Yeah.
Right. Mm-hmm. So how do you deal with those underwriting conditions that are last minute that could delay closings?
That's a really good question, because sometimes as a loan officer, we're in such a rush, especially because the realtor rushes us usually at doing the pre-approvals. Are you done yet? You received the documents 5 minutes ago. Can you be finished with this? At that point, I make sure that they know, okay, once I have all your income, documents, I can do your income qualification. But I always try to buy time by saying, you need to provide me all your financial documents, even, your bank statement, just so I can give you the pre-approval and your final numbers. Once they do that, I would have probably already done the income calculator. It's just helping me buy some time. But once I do the pre-approval detail review with the client, once they're pre-approved, I tell them we're a team. The realtor, you as the client, and myself, we're a team. So if I ask you for some documents, provide them to me within 24 hours. Because if you don't pay attention to me and you don't give it to me when the underwriter is requesting it, then there's a chance that we may close late. The underwriter, it's not like we provided the condition to the underwriter and she reviews it that minute that we sent it. They can take 24 to 72 hours. And sometimes more depending on the investor, depending on the month. They're humans. They have a lot of files. They're not going to drop everything, look at yours. So I try to tell them ahead of time, we're a team. We have to work together. If we don't, there's a chance we might close late.
Wow.
If I could add to that, the beauty of being a proactive loan officer is you obtain everything up front. And kind of what we were educated as loan officers at USA Loans was, we entirely focus on getting everything up front and to avoid delays further on. Because I'm not going to name any names, but there are lenders out there that do the basic, simple, like cut and dry qualification as possible just to get a pre-approval out. And then during the conditional phase, they're like, hey, I need 15 things, 20 things from you before we can even close this thing. And so at USA Loans, we try to focus on, give me everything, because I'm not going to ask you later. I don't want to ask you later, right? So that's the idea.
So one of the important things in the contract is that stated is time of the essence, right? Is there anything that you guys would love to see realtors do to help facilitate to meet those underwriting conditions?
I love that question.
That's the answer for that. I bet she loves it.
I love it when a realtor picks up their phone, because there are realtors that I do try to reach out and that they don't pick up, and I get it, but if there's anything that the realtor can help us on, will be conditions that are from the realtor. Sometimes they give us a contract and they forget to add what is it usually? A disclosure.
Sure.
Exactly.
That one, yeah.
Exactly. So then we ask for it and they're like, well, why? And this and that. Or they fill out the contract in such a rush that a lot of times they don't put the phone number of the listing agent.
Oh, wow.
And we need that in order to request the appraisal. So then we have to be like, hey, where's the number? And the other thing I think that would be helpful is if we can contact the client for underwriting, we always usually call the realtor, hey, I've been trying to get a hold of him. And then because they have a closer rapport, maybe they have a different phone number that we don't, then having them contact them, on our behalf. It's just working as a team. It really helps when we work as a team and being understanding. I'm going to have to add that because I feel like no matter that's why you knew I was going there, because I feel that a lot of times when there's a delay on a closing because of underwriting conditions, maybe the client didn't provide it with enough time. Maybe there's an issue with the property. The appraisal needs a repair and we need to do a reinspection. It's always our fault. Always. I don't know. It's just somehow always our fault. And I think a realtor that has been in the business for a very long time, that has, I don't know. I feel like the realtors that do a lot of self-development are the ones who are understanding and know how to handle a delay. And then there's others who just get really angry at you and make you feel like you're worthless and you go home crying.
What is the most frustrating part working with an investor compared to a first-time home buyer?
For me, I would say the investors are very number savvy, analytical. They want to see the bottom line, and if it makes sense for them, they're gonna do it. For first-time home buyers, they just want to be in a home.
Yeah,
they want to be in a home. They want to call themselves a homeowner. They want to start paying a mortgage and not paying rent. It's very two different types of clients you're dealing with, and you need to be able to adapt. Be a chameleon and adapt to each one.
Absolutely,
because you can't treat them the same.
Right.
The investor is going to leave you if you treat them like a first-time home buyer.
Yeah.
I don't know if I will say what's the most frustrating thing. I'm going to say the investors, again, they are more about their ROI and how much, all about the numbers like money mentioned. But first-time home buyers are more emotional, like my first home. Yeah. So there's a lot of emotions involved. And that's, I'm not going to say frustrating, but that's more challenging to deal with because, again, like we spoke earlier, if there's a delay, they're going to get upset. If something happens, it's just very emotional. The investor is more like, well, does it work? Are the numbers there? Okay, it doesn't work. Okay, whatever, next. And first-time home buyers are a little more attached to the house.
Yeah, it's a lot of more emotion at that purchase, for sure.
Exactly,
yeah.
Zoila, Manny, thank you so much today for answering some of these questions that our clients and realtors have on the field, in the home buying process. I'm sure this information is invaluable for a lot of people there, and they can use it to come to us realtors, USA Loans, as partners in helping them achieve the home ownership. So we'll see you guys next time.
Thank you, Michael, for having us. And don't forget to follow us on Instagram, Lo que Callamos los Loan Officers. Also, we are on YouTube and we're on Spotify. And this is our English version of our show, Lo que Callamos los Loan Officers. Bye.
Yep.